I would venture to say that a new project today versus a unit that was built a dozen years ago, it's probably 100% more expensive today for the same unit. And yet they need to fit within the parameters of these different programs. And so the construction costs have gone crazy, and you know, this project we have in Payette, for instance, just as an example, we ordered vinyl siding to re-side the project now 8 months ago, and we still can't start the siding. We've done all of the other repairs. We've changed windows, we've changed doors, or whatever, but we can't get the material. Elevators, if I wanted to build a building with an elevator today, I would have to put money down and order it a year in advance of when I needed it. And that's just the dynamic of construction today. And so the new projects go up because they have to go up, and because people are willing to pay. And then the older projects see the market, and they're on the conventional side, for instance, we have investors that have been part of the ownership tier of the conventional projects. They can see what the market rents are elsewhere in town, and they're saying, well, why aren't you raising your rents, you know? And so you have to raise your rents. During the first year of the pandemic, we froze rents at a 5% level, so we didn't increase any rents for that whole year at more than 5%. And the Idaho Housing Agency, for any of the projects that they are providing the oversight, they have asked us to continue that so that we don't increase the rents for more than 5% a year. So there is some work being done on trying to hold the rents down a little bit, but otherwise it's just increased costs and the market. I mean, the folks that aren't nonprofit are in it for a profit, and they need to make a return on the money, and they are paying 100% more for the same unit. They need to have a higher rent to cover that. The sale price for older projects has gone up just geometrically over the last 4 or 5 years. It's just amazing because there's so many people, so much cash in the investment pool and no place to invest it. And so the cap rate, which is where you quantify the value of a project based on its income capitalized by a certain number. The cap rate used to be 10% for a used project. Now they're down at 4%. So the lower it goes, the higher the cost or the higher the value. And so it's just, the market is exploding. And I don't know what kind of a correction it would take. It's hard to go backwards when investors are coming to town and buying units at $200,000 a unit, and then all of a sudden to say we want them to lower their rents. They're going to need to have as high of a rent as they can, because that cap rate, if they're paying at a 4 cap, that says that they're willing to take a return of 4% on their money. That's not very high for a person that's bringing several $1 million to a project, and they're restricting their income to only a 4% return. The amazing thing is how many units are being built, and they're all being built at the high end, very few of them on an affordable basis. But in any case, the more units, whether they're tax credit whether they're subsidized or whether they're conventional, the more units that we can bring to the market, the better we will be. Again, I refer to Catch because I admire their mission, and they're able to find rent subsidy for a 2-year period to help a person get settled. Now they have to pay the market rents. They go out and they pay the market rents. So their problem is they can't find any vacant units. So we need to have enough additional housing so that we create kind of a surplus, and that might put a brake on some of the rents, but it certainly would make more of the units, the trickle down, some of the grade B or grade C units would be rented a little bit less. So it's mostly just a supply problem, not necessarily a subsidy problem. So.